Why fewer trades make more money. Most traders believe that more trades mean more opportunities, and at first that idea sounds reasonable, because if you participate more often, eventually one of those trades should work. But if that were actually true, then the traders who trade the most would also be the ones making the most money. And in real markets, that almost never happens. Instead, the traders who survive long-term, the ones who stay calm, patient, and consistent through different market conditions, are usually the ones who trade less, not more. And the reason for that has very little to do with strategy and almost everything to do with how the human mind behaves under uncertainty, pressure, and the constant temptation to act. Overtrading feels productive. You're watching the charts closely, analyzing price movement, waiting for confirmation, clicking buttons, adjusting positions, and it feels like you're working hard, like you're fully involved in the process. But when the session ends, you're mentally drained, emotionally tired, and somehow your account is smaller than when you started. That's the overtrading loop. It creates the illusion of effort while quietly damaging focus, discipline, and decision-making. And if you've been stuck in that cycle before, it doesn't mean you lack discipline, intelligence, or motivation. It means you're reacting like a human placed in an environment designed to trigger impatience. Most traders don't overtrade because they want to. They overtrade because waiting feels uncomfortable. Waiting feels like missing something important. Waiting feels like wasting time while price moves without you, and other traders seem to be making money. Sitting still feels harder than taking action, even when there's no clear reason to be in a trade, because action gives the brain a sense of control. But trading is one of the few professions where doing nothing is often the highest quality decision you can make. And learning to sit through that discomfort without forcing action just to feel involved is one of the most profitable skills a trader can develop over time. Professional traders understand something that beginners usually learn the hard way. Every trade has a cost beyond money. It costs focus, it costs emotional energy, it costs mental clarity. The more trades you take, the faster those resources are consumed, and once they start running low, your standards quietly drop without you noticing it happening. You begin accepting setups that look acceptable, instead of waiting for the ones that are clearly worth the risk. You trade because price is moving, not because your edge is present, and the market has a way of punishing that behavior without mercy, usually when confidence is high and caution is low. Fewer trades don't reduce opportunity, they improve decision quality. When you trade less, your thinking becomes clearer, your execution becomes more precise, and your losses feel smaller because you're not emotionally overloaded or mentally fatigued. Overtrading usually comes from very specific emotional triggers. Sometimes it's fear of missing out when you see a move starting without you. Sometimes it's boredom from staring at charts with nothing happening for long periods of time. And sometimes it's the urge to recover a loss as quickly as possible, just to feel balanced again. None of these emotions improve your edge. They only pull you into trades you wouldn't take if you were calm, patient, and fully present in the moment. After many years in the market, I noticed something that changed my results more than any indicator ever did. My biggest drawdowns didn't come from obviously bad trades. They came from too many decent trades taken too close together. Setups that weren't terrible, but weren't truly exceptional either. Once I started saying no more often, once I stopped trying to participate in every move, every fluctuation, and every small signal, my equity curve became smoother, less exciting, less dramatic, but far more consistent. And consistency is what keeps a trader alive long enough to actually succeed. The mindset shift that stops overtrading is simple, but it requires honesty. You are not paid for activity, you are paid for patience. The market will open tomorrow, and the day after that, and the day after that. There will always be another chart, another setup, another possible trade. Opportunities are endless, your capital is not. Every trade you take should earn the right to use your money, and if a setup doesn't clearly justify the risk you're about to take, then doing nothing is not a missed opportunity, it's a professional decision made in self-control. There's a simple question that can prevent more losses than most strategies ever will. Before entering any trade, ask yourself whether missing this trade would actually matter a month from now, or even a year from now, when today's emotions are gone. In most cases, the honest answer is no. There will be another setup, there will be another entry, but there may not always be another account if you keep forcing trades just to feel busy, involved, or emotionally relieved. Trading less isn't about fear, it's about selectivity. It's about trust in your process and respect for your capital. It's understanding that your job is not to be busy, but to be precise. The traders who last aren't the ones clicking the most or staring at charts all day. They're the ones who know when to wait, when to stay flat, and when not to trade at all. Because over time, fewer trades done with intention will always outperform more trades driven by emotion. If this feels familiar, slow down. The market is going nowhere, and your best trades are still ahead of you. See you on the next one.